Hello and welcome back to the Dukascopy TV studio. I'm Natalie MacDonald. Up next with us, it's the man with the charts. Bruno Estier joins us now. Bruno, thank you very much for coming in. Pleasure to see you.
Good morning.
Now, in the last few weeks, you've mentioned a US dollar index rise. Is this going to last?
Well, it's doing well. It has broken out of its triangles. It has made a little pause along the arrows, and it's moving direction 80 to 50. And it is well constructed. That means it makes little steps up. So that's really good. That's looking good.
Is there a reason for this? What drivers are we seeing for this movement?
Well, sometimes we don't get the reason in advance. These times we'll get it a few weeks later. 2 weeks later, we get here now the move of the 10-year US yields, which is finishing its correction on the way down. It stops declining and has moved up in the last recent days in a situation which could be the beginning of a new rise, possibly even above 3%.
Where then are we getting clear signals then for movements?
Well, of course, higher interest rate on the dollar means possibly a higher differentials between the interest rate in the dollars and the yen, and that could mean a weaker yen. And that's exactly what we see on these charts. This chart is the yen index. That means that when the yen is moving down, the yen is weaker and possibly against dollar. And we have had for the last 4 months a very nice triangle. And this triangle is trying to be broken right now and could open up a down move towards here 94, which would be on dollar yen 105, 106.
Is this also a signal which is visible on the euro yen, say, for example?
Well, you see the euro yen had also a chart pattern which was calling for a weaker yen against the euro. Of course, recently at the end of October there had been a little bit of a hoopla as much that basically some of the latecomer in this move up have been stopped out around 133 yen for each euro. But now we noticed on this long-term chart that around 130, 160 we have one of our wonderful tools called the cloud, and this cloud has been offering some support very nicely. At the same time, momentum was oversold and allow a move back up. So it does also confirm a possible weaker yen here.
Now, Bruno, I'm going to pull you up on something. And on October 11th, you called a rise on the Nikkei. What did we see happen since?
Well, we were probably at the time a little bit impatient in the sense that we had a triangle and we wanted it to move along our arrows very quickly. It has taken a little bit more time because now, in November, we see that from that level in October, it has gone sideways for 4 or 5 weeks without distracting the potential for the upside, but just delaying it. And right now, what we have is probably a signal on the yen, which is weaker, moving above dollar yen 100. Relative strength of the Nikkei versus the S&P, which has been going sideways for a long time and bottoming possibly here. So there is some chance really that we are able to move above 14,900 toward this target of 16,400 or even 17,500.
So now we can be more sure then of these expectations?
Well, sure is not always something that you want to use as a technical analyst for the good reason that you are dealing with probabilities, right? But probably the fact that the momentum is moving up and you will get the confirmation or will be more sure if you wish, or higher probabilities once you have passed 14,900.
Bruno, thank you very much.
You're welcome.
To keep track of these movements, stay tuned to Dukascopy TV. Goodbye for now.